Today we will talk about one of the most famous and effective technical analysis tools, Fibonacci levels. You asked me to make this video on this topic and I could not let you down. In this video we will learn how a sunflower, an egg, and hurricane and this $500 transaction, closed on black by the way, are connected to each other. Sounds interesting, right? So let's get started. Let's talk about what we're going to learn in this video. First of all, what is Fibonacci retracement? Then we will talk about how to correctly apply Fibonacci levels on the chart, then which levels show the best win rate, and how to determine the best entry point to a deal. And of course, as a tradition, as usual, whatever you want to call it, we will hold a session with this strategy. And of course, put our theoretical knowledge to a good use. But before we start, I would like to thank you for your engagement with all the videos. You like and write comments, which gives me motivation to continue making useful and cool content for you. However, I noticed that among the viewers of my channel, there is a really small percentage of those who are actually subscribed to this channel. So if this video turns out to be useful and helpful for you, don't forget to subscribe to this channel, click that notification bell so you won't miss any new videos. As you already know, I am a pullback trader and I think all of you knows how to work with pullbacks, so we're not going to talk a lot about it. We're just going to quickly look at the chart and talk about examples. So we see an uptrend right here, and uptrend doesn't go as a straight line going up. It goes with little waves going up and down, up and down, up and down, but globally the price is going up. So the lower points of this wave, so-called, this is pullback. So those little pullbacks, that's a pullback. Different word to use is a retracement. So that's why the strategy called Fibonacci retracement. Retracement is the same thing as pullback, the movement down in a global uptrend. So if we look at the real chart, we see retracement right here, 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 and here. So a lot of them basically. Okay, so what is our point when we are working with this strategy? Of course, we see the global trend up and we want to open deals only for an uptrend. We find points where the price is going down and we are trying to enter a deal in those points. We're trying to find the perfect entry point at the lowest point. When we are buying trend with the most, like the best price when it's going down. We have a lot of different ways how to find the best entryway. We're going to talk about one of them today, which shows a big win rate, and that's Fibonacci retrace. So if we add Fibonacci levels on this chart, you will see that most of pullbacks, they happen on the level of Fibonacci. So right here you see the first movement, and right here the price jumped up. So the level of Fibonacci worked correctly. Now, if we look at the next example with the next point, we see that the price again worked with the Fibonacci level, and we can do that with almost every single one, like endlessly. In most cases, the price will work with Fibonacci level and react to it correctly, going to a certain level and jumping up. So Fibonacci is an amazing instrument, Fibonacci retracement, and it helps us to find the lowest point of pullback and open the deal with the best price. I believe for trading in plus, it is not enough to just know some strategy. You need to understand it, because then you will be able to adapt to different market conditions and trade in plus consistently. So first, let's figure out what Fibonacci numbers mean in general and why this strategy works. Fibonacci numbers are a sequence of numbers defined by a certain rule. The next number is equal to the sum of two previous numbers. The first two numbers in this sequence are 0 and 1. So the series of Fibonacci numbers looks something like this. These numbers are found absolutely everywhere. In nature, we constantly see examples of golden ratio, which is delivered from Fibonacci numbers. Sunflower seeds, waves in the ocean, egg shape, hurricane shapes, and many more other examples. Because it is not for nothing that architects of ancient times used the golden ratio in their calculations. We automatically perceive these objects as beautiful and correct, even in the space case, we found Fibonacci numbers in the form of spiral galaxy. But most important thing, an example, are cats. Oh my god, look, lots of cats. They're so perfect. Cats, oh my god. Traders also actively use Fibonacci levels on charts to identify potential market reversal points. For example, in this case, we see the pullback and it clearly at Fibonacci level of 0.382. Now that we have understood what Fibonacci is, let's figure out how we can apply it to our trading. But before that, I would like to remind you one of my other projects, the Academy, where you will get access to my exclusive videos, tutorials, as well as feedback from me and the supervisor. And all of this is absolutely free for you. Join my course and become a part of our trading community. For that, you just need to simply text me on my Telegram, link to which is going to be in the description box below, as always. Now, let's get back to the chart and continue the study Fibonacci retracement levels. Of course, first of all, we need to put those levels correctly on the chart. So what do we see on this chart? We see quite a lazy uptrend right here, but at some point, it moved rapidly up. This is the first factor that we are interested in. We are interested in rapid movement up or down. In this case, it's a rapid movement up. So our goal here, we need to connect swing low and swing high levels with Fibonacci retracement. So if we do it in trading view, we have this panel with different instruments on the left, and the third button is Fibonacci retracer. So let's connect the bottom part with starting from the shadows with the highest point. So thanks to this, now we can find a potential reversal point here. So we see it went up from the first point, and now it's in pullback. So let's see where is it going to happen. So it went to the level of 0.786 and then it went up rapidly. All right. So for us to correctly find the entry point, we need to connect recent swing high with recent swing low. So we in this uptrend, it's 1, and on the top it's 0. With downtrend, it's vice versa. In this case, we see downtrend, and of course, the situation is going to be similar. So we take our Fibonacci retracement and connect recent swing high right here to recent swing low right here. All right, we connected those two dots and we have Fibonacci levels, and we're looking where our pullback is going to happen, and in this case it happened on this basically green level. Now let's see how it works with Quotex. So in this case we have a downtrend, we open drawings and we choose Fibonacci retracement tool. So there are our levels. They look a bit different here, but I usually choose the color blue because it's easier to see on the chart, and let's work with it. So let's work with this pullback. So we choose recent swing high for the first point, and the second one is gonna be right here on the recent swing low. And we see that in this case the price went through pullback before the level 0.5 and the price went down. And let's look at how it's going to work with uptrend as well. So the trend changed the direction right here, and we're going to choose one of the pullbacks here. So for example, this one, right? Yeah, let's take this one. So again, taking Fibonacci retracement tool, but with uptrend there is a little trick here. So Fibonacci retracement goes upside down, and we know that to take Fibonacci with uptrend, we need 1 on the bottom and 0 on the top. So we just flip it around and we use it this way. So swing low 0 right here, and swing high is going to be somewhere there. Yeah, and we like stretch it a little bit so it's more comfortable for us to see. Yeah, we do it like this. And we see that the price started working on the level 6 0.618 and went up. All right, now let's talk about how we're gonna trade using these levels. So in this case, we of course see an uptrend, and step number one, we already know, we need to add our Fibonacci retracement tool. We need to find a swing low, it's right here, and swing high is right here. So we take our tool, we connect the lowest point to the highest point. It's gonna look like this in this case. All right, we added our Fibonacci retracement tool, and we are waiting for the price to go to a certain level, make a jump back up, and continuously move up. So what kind of level do you need to choose? Actually, a lot of traders use a lot of different levels, and I will talk about myself and a lot of other different ones. So I usually trade with three levels: 0.38, 0.5, and 0.62. So these three levels are actually called golden zone, and if the price movement happens in those levels, the price reversal is really probable in those cases. So let's look what's going to happen in this case. The price drops down to those levels. In this case, it is 0.5 and it moves up. But what is important to understand here? First of all, it's not enough to see that the price moves to that level. Even in this case, if we would open on the level of 38, we would lose, right? Of course, on the level of 0.5, we would win, but again, price can move differently. So how do we find the right point? So first of all, Fibonacci levels are supposed to be seen as support and resistance levels. It's not enough for us the price to touch that level to open our deal for the up or down trend. We are looking for additional confirmation, of course. So what happened in this case? The price was going down, and of course it met some resistance because bulls were moving the price down, and we met this resistance, and price started to wobble in that level. Then it broke through the level and jumped back up again, and then again broke through, and at the end we see green momentum candlestick covering all the previous falls and gives a new tendency for the trend. And right now we need to focus on the following: how do we find those entry points? What kind of initial confirmation do we need? All right, so what we're looking for is, first things first, how candlesticks are behaving. In this case, we can see that red momentum became smaller because bears are getting weaker. Before it became really big, but they were covered with green candlesticks here. Even though we look at these candlesticks, we still understand that bulls are prevalent on the market. Next thing we are looking for, we see that if the jump happened from that line, we need to see that it breaks through the next line. So it happens from green, we are breaking through the yellow one. But if we see here, if we look here, we see that we need to wait when the candlestick went through the red line too, which happened here. And what we see here, we see that the price was moving towards the green level, jumped up through the yellow and red one, and there is a big pressure from bulls on the market. We see the Marambusa candlestick with no shadows on the top and on the bottom, and that's a good signal for us that there is a big pressure from the bulls on the market, and we need to join them. We open the deal, and of course the deal would be closed in black. Right, let's talk about this example. So we have an uptrend right here, we have one pullback, and right now we are in this area. First things first, we need to find swing low, swing highs. They are right here on this chart. We take our Fibonacci retracement tool and connect all of those levels. All right, we have this picture, and of course right now it's too early for us to enter a deal. We need to look what's going to happen next. So let's see. The price is slowly moving to the level of 0.38, and in this place we see the first reaction. So let's talk about it more. Right now we are seeing that there was aggressive growth, and then there was aggressive fall of the price. And let's look closer to the candlesticks. First of all, we're interested in momentum candlesticks. We started with a big red candlestick, and all the next candlesticks became smaller and smaller, and then we see two dodgy candlesticks. What do they tell us? I think you know it. It shows indecision in the market. Dodgy, it's like a small candlesticks with big shadows because of the pressure of both sides on the market. They don't tell us anything, but the next candlestick shows us who won this battle. And here we see the gigantic green candlestick. It's not just a green candlestick, it covers the growth of all the previous red candlesticks, in this case 3 of them, and additionally breaks through the red level. So in this case, we already have 2 confirmations. So first one, the fall of the price, then reaction to the level and jump of the green candlestick. Is it enough for us to enter into a deal? In most cases, yes, but additionally, of course, I'm going to use additional instruments, and for example, that's going to be stochastic. I already added it to the chart, and we see the signal from stochastic. We see that the price went to the level of oversold, and this candlestick is connected to the stochastic at the same time. They have signals and all the lines looking up, and this is a signal for an uptrend. When we have all of those confirmations, only then we can enter into a deal. So let's mark this place as the place where we're going to enter, and in this case I work 3 or 5 minute expiration time, but let's talk about 3-minute expiration time, and today we're going to work with 3-minute expiration time. So we open a deal and we're waiting for 3 minutes, and of course the deal is closed in black on the 3rd green candlestick, and uptrend is continuing. Of course, let's look at the example with downtrend. So in this case we have our recent swing high there. Let's put it right here, and of course recent low is going to be here. So right now the price is moving inside of our Fibonacci levels, and right now we're still waiting when the price is going to react to one of them. So we see that the price went through the 0.38 level and jumped, started wobbling around the level of 0.5. What's gonna happen next? And it's still wobbling around of 0.5, and now we have red momentum candlestick. So what does it tell us? The price was going down, there was a pullback, and of course we see green candlesticks forming on the chart. And first of all, we look at them, at green candlesticks. Every single green candlestick is smaller than the previous one, so this is losing of momentum. And then when we get to the level 0.5, we have the resistance here. The price is going down, up, before until the big red candlesticks, because bears are winning here and there is a rapid fall of the price, and this is a confirmation for us that this is the big bearish momentum right now. So this is our first 2 confirmations, momentum candlestick and jumping of the level, and of course red candlestick is absorbing green candlesticks. Also we see breaking through the yellow level, jumping from the green to yellow, and of course we're gonna look at stochastic, and in this case stochastic also shows us the crossover of our lines, and this is the signal that there is going to be the price reversal and the price is going to go down. Collecting all of those confirmations, we're finally opening our deal for the downtrend for 3 minutes, and let's see what's going to happen. Of course, the price is dropping, going down, and the deal is going to be closed in black. Okay, so before we go to our trading session, I want to show you one of these scenarios that may happen. So we see an uptrend right here. We have a pullback. The price went up, and now we are waiting for the price to go back up again. So we are taking our Fibonacci retracement, and we are looking at how the price is moving. So it was going up, there was some reaction to the levels, but still no signal for us to enter a deal. No green candlestick covering all the red candlesticks, and red momentum candlesticks are more powerful than the green ones, so that's a signal for us not to do anything. And as you see, no reactions on the levels, right? There was no specific point for us to enter a deal. All the signals that we had here, they are basically not working, not enough confirmation for us. But we still that the price is going through the level of 1. What do we do in this case? When the price is breaking through the bottom level. Scenario number 1, we are opening the deal for a complete opposite Yeah, complete opposite direction. So in this case, open the deal for a downtrend. I don't usually do that because if the price is going through that level, I'm just ignoring this place because at most often there's going to be a new trend forming. We can try to catch this new trend and enter into a deal, but I still do not recommend to do that because it's really risky. As you can see in the past, the same situation happened, but still the price went down. But again, you never know what's going to happen. If the price is going through level of 1, we are not looking for deals there. All right, guys, let's start our trading session. So we open Quotex, expiration time 3 minutes. Amount of money that I'm using is $200. It's around 4% from my balance. Additionally, we add stochastic. Maybe it's going to be useful for us. And of course, right now we need to find good currency pairs. So what we're looking at? We're looking at a good trend. So right here we have an uptrend. And when the pullback will happen here, we will pay attention to the situation. But for now, we will continue and try to find maybe something else right away. Well, this pullback is too deep and maybe trend is going to be different, so we're going to ignore this. This one is also not really good, and this one's also in consolidation. Okay, this one, we have a pullback here, we have an uptrend, as you can tell. Let's of course add our Fibonacci retracement tool, and of course we need to flip it over because the 0 is supposed to be on the top, 1 is supposed to be on the bottom. We put it on the beginning of the pullback, and the number 1 is on swing low. Okay, so here we can look at this chart, but of course I'm not going to use only one of them. I'm going to analyze many currency pairs, and we will try to find entry point into a deal. Okay, see guys, so first entry point is going to be right here. By the way, I don't know if you noticed or not, I got a notification. I like to do this to put little notification points on the chart where the price reaches a certain level. So in this case, it was 0.3. The notification worked with a little bell notification, and it's really comfortable when you work with multiple currency pairs. But let's look at this situation. So we have an uptrend here. We put our swing low and swing highs. The price went down to the level of 0.6, and the growth of the price started. So we see here red colors, red candlesticks being smaller and smaller, and right here we're getting to the entry point of the deal. We were supposed to wait for the candlestick to close, but we didn't. But still, it's not a good not a bad thing, because we still have momentum candlestick right there, so that's a good thing. We have 2 minutes left until the deal is going to be finished, and I hope it's going to be closed in black so we can finally close the bad circle of unlucky situations, and we will start the session with a win. That's a good news. Finally, we stopped this circle full of unfortunate events, and we started the session with a plus. So we read everything correctly. The price moved up, even though we entered into a deal a little bit early. We should have waited, but still we did an amazing job. And let's continue and let's try to find something else. But with this level we're not working anymore, so there is like a rule. If I see another potential entry point, I will work with it, but when I worked with it once, I usually take off the levels and try to find new entry points in new places. So let's continue. So guys, one more interesting thing that I want to show you. So right here you can see a really long uptrend, and at this point, let me move the Fibonacci levels. In this place, the price movement started to go down, but we don't want to trade against global trend because we understand that it might be a big deep pullback of global uptrend. So what I do in this case is I like to add exponential moving average with 150. Oh my god, sorry. So if the price is higher than this level, we're not entering a deal. But if the price is lower than 150 exponential moving average, that's a good place, and that will be not a pullback of this uptrend, but that would be a new downtrend. In this case, we can definitely see that the price is really close to that level. That's why I added Fibonacci levels a bit early to see how it's gonna look. So this is the placement, and we see what's going to happen here. And by the way, in this case, the price reacted to this level, and we have momentum candlestick, and we are entering into a deal for a downtrend. Look at this situation again. Let's change the color of levels. So the logic here is quite simple. We have this pullback until this place right here, and right there we have the second pullback. The price went to the level of 0.38, and at this place we see big resistance, and we have momentum candlestick that gives us the signal for the downtrend. But if you look at the stochastic indicator, you see a really bad picture here. But again, as I told you, for you, of course, I do not recommend, if you are a newbie, to use only price action, but I'm personally a price action trader, and I prefer to look at candlesticks, and if I see good enough confirmation, it is more important for me than stochastic, because stochastic is only additional confirmation. This is a risky deal, not unlike the previous one, because the previous one, stochastic, showed us good signals, but this one, for me, I am confident enough to risk $200. So let's wait for 2 minutes and see if I was right. Welp. That's a good thing that we did. We did an amazing job, because there was no expectation of really big movements, but that was more than enough for us to get the money out of this deal. Sometimes as I said, ignore stochastic signals, not always, of course, but I can't do this, because I am confident in my analysis on the level of price action. But if you are just if you're just a beginner, you need to be confident in your actions. So I definitely recommend you to use stochastic, and do not ignore it when you just started your journey. But let's continue, and let's try to find another one. Okay guys, let's look at this situation right here. So I lost this little moment right here where we could enter a deal, and we have a little notification from another currency pair. Well, it's too early. Let's get back. Right here, I lost a moment because I didn't see this pullback from the get-go. And of course, we lost a little opportunity here, because in this point, we could enter a deal. At least at that point, we could enter a deal. But we lost this moment, and right now we are there. I understand from one point of view that the price could go even higher, but in this case I think it's too risky. You just need to accept situations like that. Do not try to run and try to enter into a deal. It's not that bad. Yes, it's sad, but you can still continue to work, because usually if you will try to run towards something like this, you would lose your money. But again, we didn't. That's a good thing. Let's move on to something new. Okay, so deal number 3, we're gonna enter right here. So in general, everything is almost perfect here. We see our growth, the pullback, the price jumping from the level of 0.6 went up, and we have momentum candlestick, and additionally stochastic looks chef's kiss perfect. But again, this deal is not perfect because the payout for this one is 65. When I just entered and looked at it, it was 58, I remember. It's not great, but still the situation is good, great, amazing. So we are expecting to get the money here. Not a lot, but still expecting. Again, I told you that many times. I don't usually use deals with payout lower than 70%, 75%, but right now I'm doing this just for the video, for you to see many examples in a short period of time, but in real life I usually ignore such currency pairs. Look at us. The second deal right away. The first one is still working. The second one just started. Let's talk about this one. We see stochastic intertwining, crossing. We see the jump from the level and momentum candlestick. We have 2 deals at the same time right now. I will look at the first one because it's going to be finished before the second one, and let's wait and see what's going to happen. All right. Interesting thing, that closed right on the border. The second earlier, God knows we would lose the money, but we got the money, which is exciting. I thought the price, I still think the price is gonna go higher, and the payout is 84%, but we will wait. If we see really good green candlestick, momentum candlestick, we will enter into another deal, but we are not working with it right now. I will look at this situation after the fact, and I will see what happened there. And let's get to the second deal. And oh my goodness, oopsie doopsie, we are losing the money. So no miracle is gonna happen in 30 seconds, less than 30 seconds. We're gonna lose the money, and let's talk about why. And it's actually quite hard to tell because everything looked really good, because all of the things show us that something really interesting happened on the market, which I don't know, because the price was not supposed to go down. Everything was on the levels, but again, this is not magic. This is science. You never know. Joking. You're supposed to know, but it happens sometimes. We are not controlling the market, and we are not going to work with this chart anymore, and we will move on to something else, something that will be more suitable for us. By the way, this is the similar situation because, but we didn't even try to enter into a deal. I was waiting, expecting that point for the price to reach it. It didn't happen, and the price went through the level of Fibonacci. And of course, I am not working with such charts because it went through all the levels of Fibonacci, and I'm not working with it. And in this case, we will probably see changing of the trend, and it will be a downtrend. So let's move on to something else. Okie dokie, guys, so let's start this one right here for $200. What do we see? We have a downtrend, and we see the first pullback, the second one started, and right now we are seeing that the green candlesticks became smaller, losing momentum, and the big red candlestick, momentum candlestick, absorbing all 3 previous ones. So let's see what's going to happen here, and we are expecting the drop of the price. Alrighty, guys, we closed the last deal in the session in black. It was really easy. We read it correctly and we did get the money. By the way, I opened that deal that I thought we're gonna win, but unfortunately the situation is following right here. So the price of opening and closing is completely the same, so the difference is 0 points, and that's a deal where we didn't get money, but we didn't lose money as well. It just closed with 0. So we have 3 deals closed in black, 1 in red, and 1 is in 0. By the way, in this session we used the moving average indicator to determine the global trend. And if you have not yet learned how to use this indicator, I definitely recommend you to click right there. And in this video, we have analyzed in great detail all the main ways to use it. And that's going to be it for us for today. Thank you so much for watching. I will see you in the next one. Bye bye.